Hey traders, this is Ron Haight at Market Tamer. Happy hump day. Hope you guys are doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Kick off here with the SPY, which I have a long-term bullish position in. The spiders did gap up today. If I really zoom in, you can see it. So there's what we closed yesterday. Gapped up here, traded up above the red line, which is your 20-day EMA, and then we finished, frankly, at the lows of the day. So the trading range is where we're back at, which is all this consolidation through February, March, April, and May. We also closed below the 50-day today. That's noteworthy too. So trading range to short-term bearish is where we are on the SPY. The diamonds, the Dow ETF. So we're not talking about the Dow Jones Industrial Average itself, but actually the ETF. And we closed right on the 200-day SMA. And here too, I can go back, I can draw something like this and say we're also in a big trading range. If I go to the Qs, they were down 1.36% today. They're almost at their 50-day. If the 50-day falls, then we would target the 200-day moving average down there. And the Russell 2000 down 1.6% today, a little bit of a pickup in volume versus yesterday, closing at the lows of the day, target 50-day. So again, daily charts are now bearish. Looking out over a couple weeks, it is neutral to short-term bearish. The long-term uptrend still completely intact. It's just right now we're getting a little bit of profit taking that we're cracking some of these moving averages. Here's Google, lost about 1 1/3% today, closing at the lows of the day. We sort of have now a double top in play. And if I get rid of that line right there, I can show you what I'm talking about. Here was a high, I put it over here. We get right back up into that 1200 area and it stops it cold. And we've now had 5 straight down days. Target 50-day, then 200-day, then this arguably triple bottom down at 1,000. Amazon lost 1.8% today, $30. Bearish engulfing the previous day. Definitely the target right now is the 50-day, and then there's a gap fill down just over 1,500. If we look at NVDA, we talked about this one entering a seasonally bearish period, and it is rolling over right on schedule. Today lost over another 2.5%, closing at the lows of the day. Target 200-day, which is down around 200. Netflix, actually, let's go back to NVIDIA just 1 second. When I say 200, I mean the 200-day, which coincides with that double bottom from April and May, just to be clear. Now, let's actually jump to Adobe. I usually do Netflix and Adobe together. Adobe bearish engulfing. We are below the 50-day target, somewhere down here, 215-ish. We could talk about that being 10% lower. There definitely is some room here if the market wants to sell off a little further. Netflix down $9, but it's still above its red line. Bearish engulfing today, and we are seeing selling off some of these highs now. But overall, there's not much technical damage being done. Here is SBUX. We have now broke to multi-year lows. If I go back 5 years, if we finish this week down around 50, you're talking about, again, 35 to 40 as the next support level. So heads up on SBUX. It is not looking good right now with only 2 more days left in the trading week. And then here's Red Hat cracking the 200-day hard today. Pick up in volume, target low 120s. Again, could be 10% lower. Keep an eye on this one. This is Transocean, almost said research in motion. RIG rig. If I go on a 5-year weekly, we are now getting into that 200 period moving average on the weekly basis. So let's keep an eye on this one, because if we start just taking out one of these highs, the upside resistance here is way higher, talking about over double in terms of stock price appreciation. So just keep an eye on this from a technical perspective. Wish you guys all the best, and I'll see you back here tomorrow night. Take care.